With US inflation numbers coming in weaker than expected, with the annual rate now at 8.5%, the odds of interest rate hike in September at 75 basis point dropped significantly, then it's now closer to 50 basis points in September, and stocks loved it. Yeah, so one inflation number, with a little lower than expected, and everything's good. So let's buy stocks. And Nasdaq soaring, closing at almost in a bull market now. S&P 500, massive run, and you'll see global markets following suit. There's the Aussie, FTSE, a little, not so much maybe. The German DAX, China, also not so much, obviously on the opposite side. Nasdaq also up. So fundamentally, I think the US dollar or the US economic cycle has probably peaked. There's going to be a lot of wash and froth and chop as we come towards them raising rates one more time. And yeah, I think it's going to be pretty tricky. I don't have any bullish reason to be buying the Aussie dollar or any of the other majors, to be honest. But then again, should we be buying US dollar if their inflation is coming off and therefore interest rates have probably peaked or close to peaking? And then you throw in the other concern is China's, I guess, growth and demands on the global supply, and also Taiwan is another concern as well, and how that sort of scenario plays out. So it's not clear sailing. It's difficult to try and find a long-term position still. Commodities in general also enjoyed the strong CPI number, the strong inflation number, with I guess the major ones are being sugar, had a stronger day, wheat had a stronger day, and lumber also had a stronger day. And that's the key one with, in terms of the housing market. Other ones lean hogs, but we come into oil is up, gold off a little, which would be to be expected if inflation is coming off, which we kind of expected anyway. Bit of interest here in the bonds is that the 10 years tanked on the inflation numbers, but then there was an auction and managed to make some gains back, but I don't think that's going to be a long-term view. I think we're now in a downtrend of lower highs and lower lows, and the bonds will be heading back toward back down as the interest rate cycle has peaked along with inflation. US dollar index. So I'm not sure. I don't think this is a lower high. That's not what I'm viewing the dollar index for. This uptrend is still intact until we make at least a lower low and then another significant lower high. We haven't got either of those in place yet. Whilst fundamentally I think the US dollar index has peaked, and we should be looking for it to track lower from here. Technically that picture doesn't sort of match the fundamentals. Euro dollar interestingly broke out of its this range that it's been in for several days, a couple of weeks now, tagged the previous double bottom and fell away. It's now kind of stuck between both of those support and resistance lines. Where it will go from here, well, fundamentally the weaker US dollar should prevail. Not that I'm bullish euro in any sense. Maybe more chop.